Commissioner Marshall, thank you so much for that kind introduction. But most of all, thank you for your service to Arkansas banks. The fair, transparent, and balanced regulatory approach of your office is appreciated by all Arkansas bankers. We were so excited about a year ago when Governor Hutchinson appointed you as our bank commissioner, moving you up from our deputy bank commissioner. Thank you so much. Jim Fuchs, thank you for the invitation to speak at this important research and policy conference. Back in 2016, I had the privilege of serving on a panel at this conference. It's nice to be invited, but it's even more special to be invited back. And this time to be given the privilege to be a keynote speaker. What an honor. Thank you very much. Meredith Covington, I want to acknowledge and thank you as well. Meredith is a Southern Bancorp alum. Early in her career, before she joined the St. Louis Fed staff, she was a policy associate at Southern Bancorp. Meredith, so good to see you and really appreciate your fine work on this year's Community Bank Survey. Recently, I had the privilege of being appointed to the board of directors of the Little Rock branch of the Federal Reserve Bank for St. Louis. So I'm pleased to serve under the leadership of Jim Bullard, our president and CEO, as well as Robert Hopkins, the senior vice president and regional executive for the Little Rock branch of the Federal Reserve Bank of St. Louis. I want to acknowledge and thank both of them as well. Immediately following my talk today, the winners of the Community Bank Case Study Competition, the University of Tennessee at Martin, will present their case study. I want to congratulate them, but also want to acknowledge the second place winners, the University of Arkansas. Southern Bancorp was proud to be their bank partner in the competition, and so pleased to see them do so very well. Over the past several years, the country has faced multiple crises: a global pandemic that has killed hundreds of thousands of people, an economic recession with high rates of unemployment and business failures, as well as nationwide unrest over the murder of George Floyd and other unarmed Black people. All of these crises have shined a light on the disparities faced by economically distressed rural, urban, and Native communities, and in particular, the disparities faced by Black and Brown people across the socioeconomic spectrum. These crises also place a spotlight on the work of the Community Development Financial Institutions, or CDFIs. For more than 30 years, CDFIs like Southern have worked in relative obscurity, serving economic distressed communities and low-wealth people. For decades, we have been one of the financial industry's best kept secrets. Now, with the increased attention on CDFIs, people are recognized that CDFIs are financial first responders to economic challenges faced by many people who are not served well by the traditional financial banks. With this new attention on CDFIs, that's what's led to my invitation to speak at this conference. So I have just a few slides that I want to share with you today about CDFIs in general, and more specifically about Southern Bancorp and our work to build communities and change lives. I'll conclude my talk with a few customer videos that are testimonials of our work, as well as a call to action for community banks and CDFIs to work better together. Let me share just a few slides with you. CDFIs trace their roots back to the civil rights and anti-poverty movement. CDFIs are private financial institutions dedicated to serving low-wealth people and communities who have been traditionally ignored and marginalized by traditional financial institutions. Now, as Arkansas governor, Bill Clinton created the Southern Development Bank Corporation, now Southern Bancorp. When he became president, drawing on his history and experience with Southern Bancorp, he pushed for the passage of the Regal Act of 1994, which formalized the partnership, the public-private partnership between the federal government and community finance organization, establishing the CDFI fund at the Department of Treasury. The CDFI fund certifies all CDFIs, and as a CDFI, 60% of our activity must take place in low and moderate income communities, or what we refer to as our target markets. Now, CDFIs may be both regulated, such as banks, bank holding companies, and credit unions, but they also may be unregulated, like loan funds and venture funds, which also may be public or private or nonprofit. Southern was founded in 1986 with the support and help of founders from South Shore Bank of Chicago, which is largely recognized as the first development bank in the country. With an initial investment of about $10 million from several organizations, including the Winthrop Rockefeller Foundation in Arkansas and the Walton Family Foundation, Southern was formed. Today, we have grown to about $2 billion in assets, serving about 50,000 customers across 51 locations throughout the Arkansas-Mississippi Delta region. We are organized legally as an Arkansas Public Benefit Corporation to demonstrate our commitment to not only providing a financial return for our shareholders, but also a public benefit. We fully embrace the principles of stakeholder capitalism. So we are committed not only to providing strong financial returns, but also deep impact for all of our stakeholders, our customers, our communities, and even our employees, where 94% of our eligible employees are also owners through our employee stock option plan. We're one of just a few banks in the country certified as a B Corp. And we're proud members of the Global Alliance for Banking on Values, a network of mission-focused banks around the world dedicated to creating a more sustainable and financially inclusive banking system. As Commissioner Marshall recognized, we have a very unique structure. Our family of companies consists of 3 separate legal entities. We collectively work together to pursue one common mission. All 3 entities are CDFIs: Southern Bancorp Inc., which is our bank holding company, Southern Bancorp Bank, which is our community bank, and Southern Bancorp Community Partners, which is our nonprofit loan fund and our financial development partner, as well as a shareholder of the holding company. We're committed to being diverse, equitable, and inclusive, not only in our work, but also in our leadership. The community banking industry is known not to be very diverse, but we are proud that each one of our boards is chaired by an African American. And in fact, our loan fund board is chaired by an African American female. Put simply, we were founded to be wealth builders for everyone. We focus on wealth building because it is a person's net worth that helps determine their financial mobility. We often quote a research study from Pew Charitable Trust that said 70% of the people born into poverty never make it out. It becomes multi-generational. Your grandmother was poor, your mom's poor, you're likely also to end up in poverty. But Pew also looked at 30% of people who climbed out of poverty and found out what was unique about them. And they all had some form of net worth. Maybe it was ownership in a home, and they took the equity out of that home to send a kid to college that broke that cycle of poverty. Or it could have even been taking the equity out of that home to start a small business, and that moved that family toward financial freedom. And so we focus on being wealth builders for everyone. Now, the markets that we serve are some of the most distressed markets in all the United States, some of the most persistently poor regions in America. Our markets contain a disproportionate number of and underbanked people who are financially strapped. And Circle Ventures, as a think and do tank, they developed a COVID-19 community vulnerability index, which measures the long-term impact of COVID-19 by census tracts all throughout the United States. And Arkansas and Mississippi have some of the most vulnerable communities and who are likely to have long-term impacts of COVID-19, well beyond the health impacts, but also including negative educational, social, and economic impacts. So as you can see, the communities we serve are in deep poverty and have significant economic despair. And so the work that we do is very much needed in the markets that we serve. And as I said previously, our focus is on building net worth. We believe that it's net worth that drives economic opportunity. So we've created 3 big, hairy, audacious goals that guide our work. Those are, we're committed to assisting people to obtain and sustain homeownership. And that's not just through making a home loan. That's also through supporting low-income housing developers, but also providing pre- and post-home buyer education and training through our HUD certified counselors. We're also committed to supporting entrepreneurs and helping them to create and retain jobs. And then finally, our third goal is to empower people to save money and to accumulate assets. And we do that not just through banking products, but we also do that through supporting public policies which help to incentivize or remove barriers from low wealth people and their ability to save money. So as you can see, we have a number of tools available, many more tools than a typical bank might have. So in addition to the traditional retail products and loan products that a bank might have, we also have tools like a credit builder CD to assist credit invisible and or credit challenged people. The bank and our loan fund, they participate in loans together. Our nonprofit loan fund can also provide flexibility that a regulated bank cannot. This provides customers with greater financing customizations and helps to de-risk the loan for both entities. We also have an array of financial education tools and education programs, including group and one-on-one counseling. I often say that wealthy people have wealth advisors, but it's often low wealth people that need wealth advisors. So we have wealth advisors for low wealth people to help them build and accumulate assets and increase their financial mobility. And then just one more example of a service. We each year provide volunteer income tax assistance sites at each of our locations. So we provide free tax preparation for low wealth people. In fact, this year we did over 3,800 tax returns for free in our markets. returning $7.6 million, 2.5 million of which went to people who were able to earn the earned income tax credit. We do this not because we just like doing taxes. We do this because oftentimes it's that refund check that is the largest check that a family will receive in a year. And we try to capture that moment at a time to help them build and save for their future. And so we have just an array of tools that we can use to help our communities build wealth. Now, probably the best way to understand the impact of our work is through our customer testimonies and their videos, in their own words, hearing the impact of our work. So I have two videos I'd like to share. One is Jennifer Williams. She's a customer who was caught in a debt trap of payday lenders. And the second one is a small business startup named TrueCap. We financed them as a startup when no other business would finance them. Let me let you hear their stories in their own words.
It will suck the life out of you. It will have you in a miserable state because of the fact that you just feel like you just can't catch a break. Thinking back when I was in college, there used to be credit card representatives, standing outside passing out flyers or whatever. And I found myself falling into debt very early. Not knowing that when I became an adult, there were things that I would need to get but couldn't get because my credit was so bad. So one of my friends introduced me to check advance places. She just told me, hey, if you need extra cash, you go, you get it, you just pay it back. And it became a cycle to where it went from 1 to 2 to 3, and I eventually ended up with 9. You think you're gonna go get one. Then when your check comes, you call yourself, well, I'm gonna pay it off. Then you realize you can't pay it off. All you can do is rewrite. Then you go get you another one and another one and another one. I do feel like they're predators, even though we willingly go in to get the money. But by the time that I had found out about the class at Southern Bancorp, it was to the point where I had no other option. I was wanting to rebuild credit, but debt was so much to the point where, hey, I needed some kind of guidance. After completing the courses at Southern Bancorp, the participants were able to apply for a Spark loan. Basically, the Spark loan was our reassurance that there's still hope. My mindset right now is great compared to what it was a couple of years ago. I got a brand new car last year. That wasn't even in the picture during the time that the situation was going on. If I wouldn't have went through the Southern Bancorp program, I would still be struggling from paycheck to paycheck, which is not a good feeling. Because now I have a 5-year-old son I have to take care of. I find myself all the time, thanking God, because you can get yourself out of the hole. It's an awesome feeling. Life is good at the moment. It is.
We've had a lot of plants in this town that have closed over the last 10 years. The whole community here was a Singer community. Everybody worked for Singer.
Oh, it had a heck of an operation back then.
The community here has never fully recovered from losing a plant that employs 3,000 people. Robert started his business as a hobby. He was building cabinets for friends. He worked at Singer and had the woodworking knowledge, and he said, well, I can make the cabinets for him, so that's what he did. And we'd spend all week making one kitchen or two, and there'd just be a couple of us and a couple table saws and cutting stuff by hand. And got a call from E.C. Barton Company, have 120 stores all over the country, and they call, can you do 3 or 4 trucks a week? In business, if anyone asks you that kind of question, the answer is yes. Even if you can't do it, figure it out, That's when we started the process with the Southern Bancorp, and talked about getting a loan and small business loan. And within 2 years, we went from doing, one or two kitchens a week, 20, 30, 40 cabinets a week, to doing 200-300 a day. Right now we do 1 cabinet a minute off the assembly line. It's kind of weird, our company, we kind of slow, and then all of a sudden, whoa, we're way up here. Small baby steps to this big, huge, giant leap all at once. If we didn't get the loan from Southern Bancorp the small business loan to be able to do this. And if it didn't happen in the timely fashion that it did, we would have lost the opportunity. You know, the opportunity presented itself and we had to make this happen fairly quickly or they were going to go somewhere else. Without the support of the bank, this business would have never been where it's at now. The new building that we're going to be moving into is about 100,000 square foot, so it's 2.5 times the size of where we're at now. There's a lot of banks, these bigger banks, who don't have that personal relationship. They don't look at the whole picture, and that's a big, huge difference to the relationship we have with Southern Bancorp, is that they look at the whole picture, they look at the person, at the company, and also just the relationships that we have. When I go into the bank, I know everybody by name. You just don't get that kind of relationship in most other banks. It's definitely a partnership, and if it wasn't for the two, it wouldn't have worked. It's really important that we keep manufacturing jobs in this country and in the smaller rural areas, because if you don't make anything, that's a problem.
Now, I'd like to spend the balance of my time talking about the opportunities for CDFIs and community banks to join forces to help foster economic inclusion. Today, 7.1 million households do not have a bank account. And we know very well that the ownership of a transactional account at an insured depository is the first step in economic inclusion. Yet, 14% of African American adults and 12% of Latinos do not have a bank account. The average wealth of African American families is $24,000. And the average wealth of Latino families is $36,000. And that's compared to an average wealth of $188,000 for the average white family. So for every $1 in wealth a white family has, the average Black family has less than 15 cents. And when it comes to home ownership, the foundation of most families' wealth, there's a 30-point and a 25-point gap, respectively, between Black and Latino families as compared to the home ownership rates of white families. Now, while CRA and improved banking practices have had some positive impacts on addressing financial disparities, the residual effects of government and corporate actions and inactions, like redlining and the subprime mortgage crisis, continue to boast the country's racial wealth divide. 3/4 of neighborhoods redlined in the 1930s continue to struggle today. And these formerly redlined neighborhoods are mostly housed low-income and or minority residents. And while the subprime mortgage crisis is out of the headlines, its effects still loom large for many families. A Black family making $200,000 annually during the crisis was much more likely to be offered a subprime product than a white family making only $30,000. Almost 1/4 African Americans, many of whom were targeted with subprime products, lost their homes to foreclosure during 2005 and 2008. That's why the net worth of African American families declined to 53% as a result of the subprime mortgage crisis, compared to only 16% for white families. Now, with full knowledge of these discriminatory practices and their effects, we, the banking community, continue to use the oppressed appraisal values to make determination of which communities are suitable for investment. And yet we wonder why certain people and communities never seem to build the necessary wealth to be full participants in the American dream. Not only that, the mass consolidation of the community banking industry has left many rural and urban and particularly low wealth communities without access to traditional financial institutions, resulting in an overdependence on high cost, often predatory financial service providers. In fact, in Mississippi, where we have about a third of our branches, there are more storefront payday lenders than there are McDonald's, Burger King, and Starbucks combined. And while the CDFI industry has now attracted much more attention, CDFIs alone can't tackle the disparities and these financial injustices, which plague millions of good, decent, but financially constrained Americans. In total, there are about 1,100 CDFIs, and we have about 173 billion in assets. That's just a mere fraction of 3.2 trillion in assets held by America's 4,700 plus community banks. Our industry is powerful, and our power has been on full display as community banks have helped to support and rebuild America's economy during this global pandemic. We've helped to save millions of jobs through the Paycheck Protection Program, and we provided individuals and small businesses with a lifeline preserving their wealth and their assets through loan forgiveness and modifications. And we continue to invest capital and credit that helps the communities that we serve move forward faster. So indeed, the community banking industry is powerful. So today, let me challenge you, my community banking colleagues, let's use our collective power to fight against poverty, to fight against the widening racial wealth divide, and to fight against a two-tiered economy where the wealthy advance and everyone else struggles. If we embrace those who have been traditionally marginalized, we can welcome in a vast new segment of customers who are eager to build their own generational wealth if just given the tools. That reminds me of the video TrueCab, the small business startup that we financed when no other bank would finance them. Now that they've matured and become a successful company, they're no longer a customer of ours, they're a customer of another community bank. And we're okay with that because they're now working in a community that needs their help, employing several people and paying a decent wage in a community of less than 7,000 people. So I ask you to join with CDFIs as we embrace America's growing diversity. Join in our efforts to reach the financially underserved and help them chart a more sustainable and stable financial future for themselves. Reach out to your local CDFIs and develop relationships and partnerships. My hunch is that you'll find there are many ways that you can work together to expand our collective impact, to create new customers, and to help bring us one step closer to a more equitable financial future for all Americans. Now, several banks have developed relationships with CDFIs, and I am so thankful for the big and small banks that have partnered with Southern Bancorp, including banks like Bank of America and JP Morgan Chase, who've made equity investments. Also, large regionals like Simmons and Bancorp South have also invested in Southern, but also community banks, some of which are smaller in asset size than we are. In particular, Reliance Bank, which is headquartered in Pine Bluff, Arkansas, and Encore Bank, which is headquartered in Little Rock, Arkansas. Both have invested in our wealth building mission. But not only has Reliance made an equity investment, which supports their CRA efforts, but they've also developed a partnership with our nonprofit loan fund, where they send their challenged potential home buyers to our HUD certified counselors for training. Now, once these customers complete their training and are ready to purchase a home, we send them back to Reliance to get their mortgage. It's a win-win for all parties involved. It's not only a good idea for community banks and CDFIs to work together. I would say that it's a must. Together, we have the power and the tools to help the American dream become a reality for so many families, regardless of their zip codes. So call me, call your local CDFI, and let's start the conversation about how together we can build a stronger, better, more financially inclusive America. Thank you.